On today's episode, we are going to take a look at a stock that is down big today after reporting earnings, and that is FSLY. FSLY is down almost 25% for the day, almost losing a quarter of its valuation. This is insane. So on today's episode, I want to take a look, is this sell-off justifiable or is it a buying opportunity? If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and stay tuned where I live stream here on YouTube, taking a look at stocks you want me to look at. So let's get started. Alright, so the stock we're taking a look at today is FSLY. It's traded under the New York Stock Exchange as ticker FSLY. Right now it's sitting at $43.20, and the stock is down 25.5% on the day, losing more than one quarter of its valuation in just a few hours. If we take a look from its 52-week high, the stock is down about 66%. So the first reason for the stock price, I want to say, is thanks to the CFO transitioning. Right now, this current CFO is stepping down after 5 years of services. The great thing is he will continue his role as CFO until a successor is appointed. Hey, FSLY, just don't find anyone and keep him being the CFO forever. And he will also remain in the company during a transition period. So that's good. It's not like he's just jumping ship, right? He's gonna stay there until they find a new CFO, and he's gonna be there during the transition period as well. All right, so the first reason, right? You hate to see executive team members leave the company, especially if it wasn't expected. So before we move into talking about some of the bullish thesis of FSLY right now, it's good to continue looking at the bear stuff right now. So overall operating expenses have increased dramatically, right? They're continuing to bubble. Right now, for this quarter, they've reported about $50.7 million in operating expenses, where just a year ago, it was about $12 million. So that's a huge gain in operating expenses right there. Not only are they increasing their overall expenses, but the guidance for next quarter doesn't look that attractive. So for this upcoming quarter, they expect an adjusted loss of 16 to 19 cents, where analysts expected somewhere between a 9-cent loss. So again, we continue to see that balloon effect on the overall expenses this company is making right now. The second thing is this company is expecting somewhere between $84 to $87 million in revenue, compared to analyst expectations of 90.8. So now a quick overview of the bearish points. CFO is transitioning, right? So that's a loss in the executive team. We're seeing a balloon effect on expenses right now, and we're also going to see it for next quarter. We can see that revenue is going to be down compared to what analysts expected, and it's also, the losses are expected to be bigger compared to what analysts guided. Let's also take a closer look at that revenue projection, right? They expect somewhere between $84 to $87 million. This quarter, they made $84.9 million. So they are not expecting much growth in quarter to quarter. And if we take a look at it last quarter, this company made $82 million. So they're not growing quarter to quarter as strong as they were growing before, right? We can see, compare last year, quarter to quarter on average, we're growing at some strong levels, where now we're probably going to be seeing single-digit revenue growth compared to a quarter ago. The final thing that I think is really driving the stock price down is right now there have been a few analysts kind of decreasing their price targets. This one's dropped it to $55 from $80. This one dropped it to $45 from $65. And this one dropped it to $85 from $110. All right, so now that we're done with all the bearish points that I have for FSLY, let's take a look at some of the bullish points, right? Hopefully all the bulls don't hate me yet. I promise there is going to be something for you guys as well. But let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services the Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the stock advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. So the first thing I really like about FSLY is the overall total customer count, and we're going to take a quick look at that in a bit. but not only the total customer count, but also the increasement of enterprise customers. And the reason enterprise customers are important is because enterprise customers generate 90% of their trailing 12 months revenue. So here I created a pretty cool list to see how growth is going for this company. So Q1 of 2020, they grew their total enterprise customers by 12. This is actually the biggest increase they've seen in the past 5 quarters. Even right Q2 of 2020, where I would say was probably one of their best quarters, where they saw a total of 114 customer growth. This is still the biggest enterprise customer growth. Not only is it the biggest enterprise growth in the past few quarters, it's also the highest total customers gain. It is important to know that maybe some of these gains are coming from the recent acquisition, but still nonetheless that overall enterprise customer gain is still a big bullish flag, on my opinion, for FSLY. Some other bullish things about FSLY. First, the revenue grew 35% compared to the same time last year. The non-GAAP gross margins are also increasing. And if we take a look at non-GAAP operating loss, which excludes stock-based compensation, amortization of acquired intangible assets, and acquisition-relatable costs, the actual loss isn't that big. Right now, they reported about $13 million in non-GAAP operating loss, where same time last year was about $6 million. So again, it increased by over 100%, but the actual millions wasn't that big of a jump compared to the revenue gains they have collected, right? So in theory, they've grown over $22 million in revenue in a year, and they've increased their non-GAAP operating expenses by about $7 million. I personally would take those numbers. So we already talked about guidance for Q2 and kind of put that in the bearish case. But one thing in the bullish case, they are updating their full year guidance and are increasing it by about 5 million on both the bottom and top end. Next, if we take a look at their balance sheet, it might look a bit iffy because they just took about a $930 million increase in debt compared to no debt before. But this is all convertible senior notes at $930 million, and this is not due till 2026. So this is pretty much cheap money, in my opinion, for them on a loan that's not due anytime soon, 5 years from now at a very low interest. And it allows them to build up cash right now just in case things get messy. So overall, I'm still happy at their balance sheet. All right, so next I want to take a quick look at valuation for FSLY, right? Right now, I think the best thing to do is price to sales is currently sitting at 10.36. And it is the cheapest it's been in about 10 months, maybe a little bit more than that. Obviously, right, why are we seeing this price to sell decrease? First thing is, like we mentioned in the bearish points, the company is not growing as fast as it normally was, right? So that's the first bearish point, and I do believe a good reason for the price to sales ratio to come down to these levels. But at the same time, this is still a company expanding, growing new customers, growing new enterprise customers at that, which usually provide very, very strong revenues. They also have a strong balance sheet with plenty of cash to allow them to continue to be aggressive in form of acquisitions in the future as well. So at $10, at a valuation of 10.36 and forward price to sales ratio, I do think it's looking pretty attractive, right? I mean, when the stock goes down, especially after earnings, I do believe it eliminates a good portion of the risk. But I do think as an investor, one thing is this is not going to be a fastly growing stock in forms of revenue unless something changes dramatically throughout the quarters. So for me, I am currently holding FSLY, not a big position in my portfolio, and I have no intentions of selling, none whatsoever. I do want to watch it a few more days before deciding if I want to enter or not. But I am not gonna lie, it is looking super attractive right now. If this is your first time here, make sure to hit the subscribe button. Don't forget to hit the thumbs up and take care.